After we have identified the main trading range, the main channels within the market, the next key is to identify patterns like wedges and triangles and things like that within the market. And those are going to be secondary to the ranges, which is why the channels are the most important. And then you'll start to see the patterns within those ranges. So things like wedges and triangles are going to be the main patterns you'll start to see within the market. And the key to patterns is, since they're secondary, it's where they're located within the range. And then that's going to be really crucial to decide how important the pattern is. So things like this, where you start to see that consolidation range at the top of the channel, it's a really good sign for, as far as knowing that the bottom of the channel is down towards here. We have a lot of room for profit targets within there. And it's also at a turning point, and a really good turning point because it's with the trend. So things like that, when you're identifying patterns, that's going to be the main key, is to know where that pattern is forming. And that's why knowing where this trading range is, that's why it's primary, and the patterns are going to be secondary to that. So continuing on, we have a wedge here too that formed. It's a sloppier wedge because we like to see clear movement from forward to back, but it's the same concept as far as having this top trend line and then a baseline in there. And these are the two most common patterns, the wedges and then, or the triangles and then the wedges. And then we also have a minor wedge right below this too. This is more so what you want the wedge to look like, where you see that bottom come all the way down and then test. This one's a lot clearer than, say, this one, but we have a defined baseline on this one, so it's the same thing. And then we also have a wedge right here too. That's also a clean wedge as well. Let's see. There's also a triangle over here while we have this bottom baseline. This is a channel with a secondary channel, and then you can see that we start to form a top trend line as well, and that's where you start to see the triangle form. And that's also at the top of the range too. So it's a really important setup compared to when you have a minor setup in the middle of the range like this. It's usually a lot smaller than something that's at a really good turning point. And the patterns are just going to represent consolidation ranges in the market, which represents a turning point where things are getting decided. Things are starting to, like within this triangle, are we going to break out to the upside and form a new trend? Or are we going to continue the trend and break down further? So that's why the positioning of the patterns themselves are so crucial. And like I said, that's why the channels are always primary to the analysis, and everything else becomes secondary to that. So I think those are all the patterns within this trend itself. So that's the main key. First step is drawing this main range that you're in, whether it's a smaller one like this, or the entire trend like this one that's drawn already. And then the next key is to start identifying the patterns within there. So starting off, what I usually do for backtesting and things like that, I'll go through the market and I'll just try to identify patterns, triangles, wedges, things like that, just off of the price itself, and starting to train your mind to know what to look for within the patterns and things like that. And then the second step to that would be drawing the channels and having that main range, and then including patterns within that. So if you have any questions or anything that you don't really understand, just feel free to let me know.